What is going on, investors? Hopefully you guys are having a great day out there. A little under the weather today. That's not going to slow us down here on the Investor Channel. It's time to look at Home Depot. And this stock's slowing down a little bit today, down about 5% during the regular trade after reporting their Q2 earnings. We'll get into them. We'll take a look at them, take a look at some of the things that are impacting some of their Q2 earnings. And while they missed on the comparable sales metrics, compare them to Lowe's like we always do. Look, it's not necessarily a competition. This is not like being a Lakers fan or a Celtics fan or a Democrat or Republican or something like that. We're not trying to compete here, but we can look at these two companies and compare them because, in my opinion, extraordinarily similar. Now, we're going to get into the Q2 numbers, take a look at the revenue, the profit, and all those types of things that we've got going on with Home Depot. And then we'll take a look at the stock chart as well. I remember doing a video last quarter on this one. I think it was back in this time frame, right back in May, and we did have a big drop. And I thought potentially we could get back into this consolidation zone with Home Depot between $260 and $290 per share, which I think would be an absolutely fantastic spot to buy this stock. Now, unfortunately, we didn't get all the way back in there, but we did take a pit stop down here about $300, okay? And so we'll talk about this from a technical perspective. We're sitting here right at about $317. Can this momentum continue to pull back? Because look, this is an absolutely fantastically run company. As we walk through these financials, I think you'll tend to understand that. We got about a 2% yield on this one, $6.60 per share. We've got a buyback. There's a lot of things to absolutely love about Home Depot. Now, people are not loving right now are home prices. And on top of that, you've got home builders, which are dealing with skyrocketing lumber prices, labor prices, all those types of things. Those are driving up the cost of new homes to the point to where the gap between a new home and a quote unquote used home, or one that's an existing home already on the market, boy, the spread between those two are very, very tight. And that is leading to home builders' confidence basically being at a 13-month low, as costs just continue to skyrocket. And obviously home builders are tied a little bit, and I say a little bit, to Home Depot because look, you buy an existing home, you want to put a deck in or you want to put a new roof in or something like that. Home Depot is certainly going to benefit from that. So, but it's just one of the a headwind now, but you can assume that maybe at some point 12 months down the line, it turns into a tailwind. All of a sudden, home builders are confident again, and Home Depot could benefit from that. Now, shares are down on Home Depot, like we talked about 5% on this one, as the comparable sales missed. So the comparable store sales was actually up, okay? And so when we say it missed, it just wasn't as good as what investors were anticipating. So comparable store sales came in at 4.5%. The consensus mark was actually quite a bit higher than that, about 5.61%. In the United States, the stores saw 3.4% growth. The expectation was much closer to 5%. So that's actually a pretty big miss. We'll talk about that here in a second. The other thing that I noticed was that merchandise inventory was actually up 40%. So it could be that Home Depot was actually anticipating what they were expecting much larger comparable store sale growth, not only around the world, but here in the United States. And when it missed, it left them with merchandise inventory up 40% to $18.9 billion. So we'll talk about that here in a second as well. The other thing that we'll talk about is gross margin. That was down about 80 basis points to 33.2% as well. Now, let's compare this to Lowe's really quick. Again, this is not necessarily a competition. If I wanted to invest in this space, if I wanted to get into the home improvement retail space, I'd look to actually buy both of these companies, and both of these companies at good valuations. Now, one thing to keep in mind is, for whatever reason, Home Depot always trades at a premium from a price to sales basis. Home Depot trading just over 2, really almost closer to 2.5 times sales. And that's where it's hung out. I tell you what, you see this one pull back to about 2 times sales. That triggers a buying opportunity, at least on this 3-year chart. For Lowe's, we're trading at about 1.25 times sales. Tell you what, you get this one a little bit closer to 1 time sales, you're probably getting a pretty good value on Lowe's. In terms of Home Depot and Lowe's, from a price to earnings basis, they both have kind of a low 20s, mid 20s price to earnings ratio. Home Depot trading currently at about 23.5 times sales. Lowe's trading at about 21. When these two get a big gap here, and this is not necessarily a big gap, we're talking about 3 or 4 points on that price to earnings ratio, well, it tends to close. And so right now it's showing me with without looking in at Lowe's financials, well, it could be that Home Depot is going to work its way back to Lowe's, or Lowe's could be working its way up. Just some things to think about. Now, let's jump over to the financials with Home Depot. We've got our statement of earnings. This is profit. This is loss. We've got our 3 months ended here. The left-hand column, August 1st, 2021. This is our most recent quarter. So we've got our net sales here. Those came in at $41 billion. That was up 8% over the previous period a year ago for the 3 months at $38 billion. We see here for the 6 months, we've actually got really strong growth over the last 6 months. We're up 18%. We went from $66 billion up to about $78 billion on that sales. Now we've got cost of sales as well. We talked about how that compressed a little bit in the most recent quarter, is that we had margins compress a little bit down to 33.2%. We'll see evidence of it here when we look at gross profit as well. So we've got our cost of sales going from $25 billion up to $27. That's a 9.3% increase. For the last 6 months, we're up 19% on those costs. And that is driving to a little bit lower gross profit than I think investors were expecting. Take a look. We went from about, we'll call that 13 up to about $13.7 billion on that gross profit side. So notice this, your net sales grew 8%, but your gross profit only grew 5.6%. So it's showing you that our margins kind of compressed a little bit in the most recent quarter. We see here for the last 6 months though, not necessarily. So what it's showing me is that potentially Home Depot saw some increases. We saw obviously lumber and copper and all these prices in terms of home building and those types of things. Everything that involved a home went up in price. What this is showing me is that Home Depot didn't necessarily pass all those costs down to the customer. And so we'll see if they're able to do that maybe potentially in an upcoming quarter. But we did see that comparable store sales missed our expectations. Expectation was for 5.6. It came in at 4.5. So it shows me that Home Depot probably did the math and said, well, we were already missing the expectation on comparable sales. Okay. And so if we raise prices even more, guess what that's going to do to demand? I mean, supply and demand is really easy to understand. You raise price, demand's going to go down. So if Home Depot had passed through cost even more to the consumer, I think the sales would have been off on a comparable basis even more. And so it's showing you just a little bit, that inflation is the ability to pass that price down to the consumer and the demand still be there. We're seeing that demand falls off if you see any rise in prices. In fact, prices actually got lower. The margin over at Home Depot got lower, and so did the sales demand, at least from a comparable store basis. Now, in terms of other costs, we got other costs. They did a fairly good job at controlling this. Look, selling, general, administrative, basically flat year over year. That's actually really impressive. When you grow your revenue 8% and the cost to generate that with employees, buildings, those types of things only grew 1%. Actually fantastic. We see here for the last 6 months grew about 5%. That gets us down to total operating expenses. They include depreciation and amortization. One thing you keep in mind, this is non-cash, but it's only $600 million off of this, basically a rounding error. So not that big of a deal. We've got total operating expenses grew just over 2% in the quarter. That's fantastic. Over the last 6 months, closer to 6%. That gives us operating income. So we take this gross profit right here, this $13.65 billion or $665 billion. We minus our operating expenses at about $7 billion. That gets us operating income or operating profit in the quarter coming in right at $6.64 billion. That's up 9% over the previous period. Still fantastic. Okay, for the last 6 months, we're trending even a little bit better than that. We're up about 33%. We went from $9.3 billion in profits up to $12.4. Now, they have some interest expense. They pay some taxes and those types of things. We come down here to net earnings. $4.8 billion in net earnings. Last year, we're sitting right about 4.3 over the last 6 months. Just absolutely fantastic. Went from 6.5 up to closer to 9. That gives us basic earnings. We'll come down here to diluted earnings per share at $4.53. This is in a quarter. And for the entire year, Home Depot pays you $6.60 per share for the whole year. In a quarter, they make $4.50. In the last 6 months, they've made $8.38. Home Depot has consistently raised this dividend, And they have plenty of room to do that. So that should be exciting for you as a shareholder. When we get down to cash flows, you will see more evidence of that as well. On the balance sheet, not a lot to see here. One thing that I did want to take a look at is I wanted to show you this merchandise inventory. Take a look. Last year we had $13.5 billion. Back in January we had $16.6 billion. This is total amount of merchandise inventory inside the Home Depot system. So we had 16.6 in the beginning of the year. Last year we were sitting at 13.5. Now we're all the way very close to $19 billion. Are they stocking up for the holiday season? Maybe the Q4. Look, with supply chains the way they are, it wouldn't surprise me if Home Depot's like, let's get a bunch of inventory in now because it might get really tight in Q4 trying to get all this inventory here. That is possible. That is possible that they're kind of front loading inventory now. The other story it could paint is that they are not able to pass these prices down to customers. Customers are rejecting that, and you see a little bit of evidence again in these comparable comp sales that are down and missed the mark considerably. They're not down, they just missed the mark considerably. That is also potentially showing you that consumers are rejecting any kind of price increases that they're seeing over at Home Depot, and then maybe they're rejecting these products altogether. Now, in terms of total assets, up a little bit. Liabilities, we do have some long-term debt and those types of things. All things being considered, looking pretty good for a retailer out there. Now, in terms of cash flows, a couple things that I wanted to point out to you. On the cash flow side, it looks a little bit different. Okay, we went from $14.9 billion in cash flows down to about $10 billion. That's while increasing our net earnings. So we pull down this net income number. This is for 6 months. We pulled down $6.5 billion last year. We pulled out $8.9 billion in this period. But what's interesting is they had this change in working capital. So they had this massive change in working capital that really helped their cash flows. All things being considered, relatively in line with what you'd expect over at Home Depot. Now, the other thing that I wanted to show you is in the last 6 months, they've done a ton of shareholder-friendly things over at Home Depot. Repayments of long-term debt, a 1.5. We actually took out long-term debt this time last year, closer to $5 billion worth of debt. We repurchased nearly $7 billion worth of stock in the most recent quarter as well, and we paid $3.5 billion worth of dividends. We're seeing the evidence of the dividend increasing over the last year, went from $3.2 billion up to $3.5 billion on those cash dividends. I think those dividends are likely to increase over at Home Depot. Now, from a technical perspective, we talked about this, how we actually had a big candle drop last time when Home Depot reported earnings, and we thought, well, maybe we get back into this box. At the very least, I thought we'd come back to $289 per share. I tell you what, it took a pit stop up here at about $300 per share, and it looking like to me that we came one thing is absolutely for certain on this chart, is that sellers are stepping in right at $340 per share over at Home Depot. So when this stock hits $340, sellers are stepping in, and we've created a one top, double top on this one. This one looks like it wants to come down. Will it come down and retest this $300 mark? If it does, I actually think this is not that bad of a buying opportunity. I'll tell you why, is because this $300 mark should act as an area of support. If we break through the 300, right under that is 290, and 290 was really our previous, 340 was our top pattern that we've made over the last few months with Home Depot. Well, before that, it was actually 290. And so if you walk back to close to $300 per share on Home Depot, you like the dividend, you like the sector that they're in, I think this is not a bad buying opportunity for Home Depot. You come down here to 290, that's another buying opportunity. I tell you what, you break through 290, and you're going to be like, oh man, I don't like that Investor Guide channel, because I tell you what, you break through 290. Well, this is an absolutely fantastic area, all the way down to about $260 per share. There should be some buyers stepping in on Home Depot. So I would nibble along this way. Get down to 300, nibble on some shares. Come down to 290, nibble on some shares. You break 290, you get in here to this 275 to 260 range. That is where I think you unload your full position. So think about these things in advance. When I say it's a buying opportunity, what I want you to do is think about how many shares of Home Depot do you want? And those are all decisions you need to make based on your portfolio size. Look, this is a $300 stock. And so if you have a $5,000 portfolio, look, you're talking about one share, maybe two shares of something like this before you become mega overweight. Now, if you got a 10,000, 20,000, you got an employer match, you're doing a self-directed IRA or 401k, and you've got 50, 100, 200,000. Well, it starts pulling back to these levels. Yeah, you can start nibbling on a couple shares. So think about that. And even if you're playing with a smaller portfolio right now, these are things that you want to think about because one day you're going to have a big portfolio. And so you're going to want to think about these types of things and develop that discipline now. And so later on, when you have these opportunities, with a bigger portfolio size, you can make really, really wise decisions. That was Home Depot. Down about 5% during the regular trade. We'll see if this one finds footing, down about $300 per share. We'll see what happens with Home Depot. I like this stock. I like the fundamentals. I think they're heading into some headwinds, but they should make their way through that. They don't got a lot of competition. I like Home Depot. Hopefully, you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.